Hello, it's West Beibers with the Commonwealth Group out here on beautiful Pickwick Lake today. I'll circle my camera around just a little bit, let you see a little bit of the lake. Isn't that pretty? Yep, we're up here at the North Shore development, which is absolutely gorgeous here at Pickwick. At any rate, you see some of the houses behind me. At any rate, it's probably one of the last nice days of fall out here before the weather really turns on us. But I wanted to get another video in before too long, as I kind of wipe down my sunscreen here a little bit. At any rate, after the last several videos, I've had a couple of people ask me about the housing crisis that we're currently in as far as affordability and all this other stuff. And one of the things that has come up in some of the commentary and some of the emails that I've received has been, how do we get out of this? How do we break out of this situation that we find ourselves in? And before I answer that question, I think there's a bigger thing we need to discuss, and I was thinking about it this week as I was getting ready to put some of this up. Before we know how to solve the problem, we need to know how we got here. And just like it's going to take a lot of different things to get this straightened out, it wasn't just one thing that brought us here. Everybody says, oh, it's interest rates and we don't have anything on the market. Well, yeah, but those are all the effects. But ultimately, what are the causes of the current situation that we find ourselves in? Well, I'm not going to do this all in one video because it would take too long. So we're going to break this up over a series. But today, I wanted to just kind of talk about how we got here. And this is a story that actually goes back over 30 years. I've been in the business for over 35 years and have seen a lot of bad housing policy come out of Washington and to a large degree the states, but especially Washington, D.C. If you go back into the early 90s, think way back to that time frame when Bill Clinton was in office, we had some studies that came out. I think that one was called the Boston study, if I remember correctly. Well, anyway, and it was talking about the importance of it pointed out how that we were seeing a lot of minority home applicants getting turned down for their home loans. Okay, well, all right, that's not good. Well, one of the problems with that study that came out was they didn't take into account things such as credit and other things like that. And even the people who started the study back in the early 90s admitted it was a flawed study. They didn't take into consideration everything that needed to be thought about. They were looking for a problem, and wow, they found it. So anyway, we have to go all the way back to that time, because a lot of the problems that we were having now are actually planted during that time period. And what we saw was an emphasis on extending credit to people who normally wouldn't get credit. And that started in the 90s. And it goes all the way through the Clinton presidency, all the way up to George W. Bush, where he even talked about the ownership society and the idea that everybody should have a house. Well, yeah, that sounds great. And it's certainly something to root for, but at the same time, not everybody is ready to buy a house for just a variety of reasons. Some people don't need it. Some people aren't ready for it, on and on and on and on. You can take your choice. But there was a belief that if we only gave people the opportunity to get into a house, everything would be okay. Well, we didn't see how that would work in the industry, and sure enough, it really didn't, because there were a lot of people in the industry in the late 90s and early 2000s who were going, this is probably not a great idea. Suddenly we were approving people who would never have had a chance of getting approved before, not because their economics had gotten better, but because we had loosened our credit standards. So when we loosened the credit standards, we were getting people into houses who just, they just weren't ready for one reason or another. And we all know that didn't work out very well. But the seeds of the crisis were planted during the Clinton administration. And I always say, it's kind of to paraphrase the good book, Clinton planted and George W. Bush watered on that, if you want to go back and look up that reference. At any rate, a lot of the things that came out of there, and we saw the beginnings of some of the crisis with Fannie Mae. We even had some directors of Fannie Mae who were involved in questionable dealings, such as Franklin Raines, who admitted to accounting errors and other things going on at Fannie at the time under congressional inquiry. But what really supercharged it was government policy. And we're going to talk a little bit more of that and the regulations and what was happening in the mid-2000s, 2005, 2006, all the way through there, when we had government policy that was really encouraging home ownership, actually for people who weren't ready. And we saw the rise of the subprime industry, people who wouldn't normally qualify for Fannie or Freddie or FHA, etc. But we're going to talk about that in the next video. So stay tuned, as they say. And probably the next one will not be out on the lake, because I think this is probably our last pretty weekend out here. So anyway, more to come. Part 2 in the next couple of days. We'll talk to you soon. Take care, everybody.